Hi guys, Mortgage Mark. Let's talk about an escrow analysis and rebalance. So if you have an escrow account or if you're about to get one, this is important. So an escrow account is regulated by the federal government. Like to the penny, there's only so much a mortgage servicer or a mortgage company is allowed to collect and allowed to keep. So any given tax year, at the end of the year in Texas at least, when the taxes come due, that money, the check gets written. During that time period as well, during that year, your insurance will eventually come due and they'll write a check for that. Well, once a year, typically around that February, March time period, mortgage servicers are going to do an escrow analysis. They're going to go in and say, man, how much did we pay out and how much is left in the piggy bank, right? The piggy bank with your name on it, that is your escrow account. Well, again, there's only so much they can hold. So if they have too much money, they will issue you a refund. They'll give you a check that says, hey, we have too much of your money. Here you go. And you get it back. If there's a shortage, they're going to send you a nastygram saying, hey, we're short, you owe us money. In that instance, one of two things happens. You can either write them that check for the difference, and then knowing that your payment will get adjusted for that year to say, okay, going forward, we're making up whatever the real payment should be. They'll adjust your payment because the escrows go up or down. And the other option is you don't have the money. Maybe they need a lot, and you don't have the cash to write the check. Well, unfortunately, what they're going to do is raise your monthly payment because the escrow is increased, and they're also going to raise it even more to recap whatever that shortage is for a 12-month period. So for 1 year, it could hurt a lot. So in escrow analysis, typically you're going to find most of the time the really, really big shock comes either after buying new construction, and if you did your new construction loan with us, hopefully we've told you all about it. There's a whole video and information about it, and we have a way to prevent that, so check that out. But it's either with new construction, or it can be where you bought a house at a deep, deep, deep discount. Maybe somebody's lived there forever and they remodeled and the central appraisal district didn't know it. And now you buy a $400,000 home and maybe it was on the tax values for $200,000. Well, when you buy the $400,000 home, they're popping your taxes up, guys. So just be aware that if you set it up off that $200,000, because that's what it was at the time of closing, that you may have that nasty gram coming. So if you have questions, obviously call us. Just realize they're always going to try to keep that cushion in there. Well, not try, they will keep a cushion where there's going to be a little bit to where if taxes or insurance goes up every year, they got enough to pay it. But do realize over the time, as taxes and insurance both increase, your monthly payment will also increase if you have that escrow account. If you have questions, call us. We're certainly happy to help.